Good morning, everyone. My name is Timothy Lee, and I'm a mining analyst here at Red Cloud Securities. We welcome Mark Brennan, President and CEO of Cerrado Gold. He will speak to us about Cerrado's gold production and development projects in South America. Mark, you have 15 minutes, and then we'll have a 5-minute Q&A at the end of the session. And attendees, please feel free to ask questions using the Q&A link below. Take it away, Mark.
Thank you very much, Tim. Good morning, ladies and gentlemen. With regard to Cerrado Gold, we're a junior producer, currently looking to become a mid-tier producer by 2025. And we're looking to do that with two projects in South America, one in Brazil and one in Argentina. We have two projects that we believe are world-class, and they're going to drive a very strong production growth profile. This will actually generate lots of cash. We have a management team that have been together at its core for about 20 years. We've worked on 3 projects together very successfully, and we believe that Cerrado, in its early infancy, has already been a success for the early shareholders. But we still believe we're in the very early stage of the growth curve for the company, and so lots of opportunity for new shareholders to participate in the value that we anticipate to be created. We have a market cap currently of about $100 million. Canadian. Basically, the shares are held 40% by management, about 30% by institutions, and the balance by the retail. We have good coverage for a very young company. We've only been public for 1 year. We went public on February 23rd of 21. Tim Lee at Red Cloud has been following us since our inception, and we're very excited by the prospects that we have that we've been able to share with Tim. We have 2 projects, one in Brazil, which was actually the creation of the company, Monte do Carmo. In 2018, we were introduced to this project by 2 geologists who discovered Belo Sun's project that has the largest undeveloped gold deposit in Brazil with 7.4 million ounces. Very strong geos who brought us this project, telling us that they thought there could be 5 million ounces here. We took a look at it. We thought that possibility was very real. Since 2018, we've taken the resource up to about 1,000,003 ounces, good grade of 1.85 grams, open pittable. What's special about this project, as we delineated in a PA last September, is that we're going to have a very low capital cost here of $125 million that includes $25 million of contingency, yet we'll be able to produce on average 131,000 ounces for the 8-year life of mine. What we're looking at is the first 5 years are very special. According to our PA, we're looking to produce 150,000 ounces on average per year, with an average all-in cost of less than $431. That would make this mine the lowest cost producer in the world, bar none. So a very, very special deposit in the short sense. And what we're also looking at is this is still a discovery asset. The 1.3 million ounces, it was our initial pass at driving a resource. But what we're looking to do is to actually grow that resource very substantially. We're also right now in the PA stage, in the feasibility stage, where we're doing infill drilling. We expect to have the feasibility completed by the first quarter of 23. And from there, we expect to be in construction in Q3 of 23 and in production by Q4 of 24. So a very exciting time for us and a very strong growth period. What was special again about the PA is based on the 125 million capex, we had an NPV after tax of 617 million US, which is about 800 million Canadian. We had an IRR of about 95%, one of the highest IRRs and NPVs that I've seen on a relative to capital expenditure in projects in my career. In March of 2020, we acquired Minera Don Nicolas in Argentina. We bought this on the basis that we saw an 8-year mine life at 50,000 ounces on a base case, with a cost of about $1,000 all in. We've spent the last couple of years turning this mine around. It's been a difficult time due to COVID, but at the same point, we have a resource here of about 1 million ounces, higher grade for open pittable ounces of about 5.5 grams per ton for our measured and indicated, and then inferred of about average grade of about 2.3 open pittable. Looking at the project itself, it's in Santa Cruz province, a really good mining district where we have significant neighbors all around us. Anglo produced 8.5 million ounces to our south. We have Newmont, Yamana. The reality is that we're in a great district that's underexplored, and our project is certainly underexplored. We're targeting 50,000 ounces this year, 70,000 ounces next year, and 90,000 ounces in 2024. So lots of growth still here. You'll see our historic track record. We have a history of being able to increase production, generate cash, reduce costs. Here's the timeline of activities. I'll let you review those at your leisure. Again, we have a very strong team who have performed very significantly for our shareholders. We are builders of assets. We are following cash. We really want to generate cash flow as much as we can, and with the limited investment to return that cash. We've done that very successfully, first with Desert Sun, with Sierra Metals, with Largo, and now we've had a very good pass for our shareholders to date, but we're still trading at a significant discount to our peers. And we believe over the course of the next year that you're going to see that discount substantially erode. I'm not going to go too much into detail on each project, but all I'll say is that in Brazil, we're in a very good jurisdiction, one of the richest states. It's a heavily industrialized agricultural state, so very flat land. We're not in the jungle. There's soybean, there's corn, there's some undulating hills where we find the geology. Our geology is fantastic. The reality is that the gold is coarse gold. We're focusing on hydrothermally altered granites, but again, it's coarse gold, non-refractory. On the recovery basis, we derive 80% of the recovery from gravity alone, which is highly special. Likewise, we see through flotation and leaching, we take that up to about 98%. There's no deleterious elements. We don't have any issues as it relates to the community. We've got great relationships with not only the state government, but also with the locals. The locals are driving the process, but the infrastructure here is amazing. We're 2 kilometers from a paved road. We're 5 kilometers from the main highway. We're 3 kilometers from a town of 7,000 people. We've got a 69 kV power line running through the property. We've got an estuary from the major river coming into our property. So all the ingredients here are there for very strong success. This is our main Cerrado deposit that we're focusing on. Some of the discussion points that I've had. Really important, this PEA that we published in September of last year. This is probably one of the best PEAs that I've seen in 8-year mine life, 131,000 ounces per year with only 126 million of capex, so 25 million is contingency. So a very, very special project with an all-in NPV of 617 million US. Most companies trade in around that 0.6 times. That would give us a 3- to 4-fold increase from where we are today. So we still have a lot of catch up with our peer group, and this is how we're going to do it, driving the mine to production by late 24, early 2025. Lots of considerations gone into ESG with regard to the leach pads and with regard to potentially looking at solar power. And from that regard, we think that we've got that well addressed. I also mentioned that it's an early stage project in the discovery phase. We've only focused to date on this area called Serra Alta, but we have started exploration in these other regions. We had about 9 or 10 candidates of targets to go after, and these are the 5 that we're now focusing on. We'll be focusing on for this year, and our expectation and our hope is that we'll see a significant increase in our resource moving forward. So you've got 2 paths taking place here. You've got a development path, and you have a exploration path, both of which are still in their very early stages. All that to say, we're on that asset alone. Forget about anything else. We're trading at a substantial discount to our peers, and we've got a first class, what we consider to be a world-class project that will be the lowest cost producer in the world. In Argentina, as I mentioned, we're in Santa Cruz province, about 1,500 kilometers south of Buenos Aires. We're in this belt called the Desierto Massif, surrounded by phenomenal neighbors with long history of production. To the south, we have Cerro Vanguardia by Anglo, produced 8.5 million ounces. They're producing about 250,000 ounces these days. To our east, we have Cerro Moro by Yamana, producing 250,000 ounces. Cerro Negro to the northwest, producing 350,000 ounces. We're in a big belt. It's a classic epithermal system, low in sulfides, very similar to Nevada, but at the same point, de minimis exploration that's taken place. With regard to the belt itself, most of these mines started as open pits and they went underground. We acquired this project, as I mentioned, on the basis that we had an 8 or 9 year mine life, 50,000 ounces at $1,000. We've gone in there, we've restructured the operations. We've done a great job in terms of getting Paloma and Martinetas, the two key areas where we're mining, where we've got that with COVID, which was a significant obstacle to our development. We've done a great job there bringing that into production. And what we've achieved there is we've first and foremost improved the grade from 2 grams to 4.7 grams, reduced cost by 12%, increased the recoveries, moved our throughput from 900 to 1,200 tons per day. And all that, the ingredients there are such that with 50,000 ounces per year, we're now looking at about 30 to 35 million of free cash being generated by this project. So a real strong generator. As I mentioned previously, we are targeting to go to 70,000 ounces next year from 50,000 ounces this year and up to 90,000 ounces in 2024. One of the major ways we anticipate we'll be able to do that is through heap leaching. We're looking at a leaching process where basically we can drive lower grade material. People have always focused on this area, on this mine, on the higher grade material, but we've brought in a double stream where we're looking at higher grade, which will be a 1.6 grams and above. And then anything below that will go through heap leach pads in the north and the south, down to a cutoff grade of 0.3. So still very good grade, even though it's lower grade than our 1.6 cutoff. The other thing I'll just mention where we see really strong growth potential is coming from underground. We have yet to start underground exploration. There's never been any significant exploration underground. All our peers in the belt have gone underground, and so as you can see by this chart at La Paloma, basically what we're looking at is significant potential to expand south. We've already started drilling there, and to date we've already had some pretty good success. So again, what we're looking at is a project that really is isolated in the sense that we're not looking at funding any of the project from the operations in Brazil. Argentina funds itself, Brazil funds itself, and we're still looking at some pretty good capex and growth for Argentina moving forward. So with that, that's basically the Cerrado story in a nutshell. Sorry for running through it so quickly, but I'd be very happy to address any questions anybody may have.
Great. Thank you very much for the great presentation, Mark. We'll now move to the Q&A session. We do have a few questions already. First, kind of looking at the drilling side of things, what is the total cost per meter drilled, and how much cash do you have for drilling in Brazil?
In Brazil, we're running around $250 per meter. We currently have 4 rigs on the property now, and we're bringing 2 more rigs on in April. Our target is to drill 21,000 meters of infill drilling to bring our resource from the inferred resource into the measured indicated category for our feasibility. And then we'll do an additional 14,000 meters of pure exploration drilling. Our objective is to show investors within the next, by the end of the first quarter, that we have a very strong funding lined up for the project, which basically will hope to be non-dilutive.
Right. And there's one question about how many meters you just answered, how many meters of drilling are planned for 2022, but also Argentina, there's ongoing exploration work. What are the plans? Significant
exploration. So with Argentina, our focus on drilling there is near mine, underground. Again, the near mine focusing on both the deeper, the higher grade as well as the lower grade. So I would anticipate we're looking probably at around 20,000 meters in Argentina. Cost would be around that 200 to 2.25. We do a lot of RC drilling, so a little bit cheaper, as opposed to HQ drilling in Brazil. Yeah, again, now Argentina, as you may have seen, the first quarter last year we broke even. Second quarter we made a little bit of money. Third quarter we made a little bit more. Fourth quarter looked like a real bumper quarter. And at that 50,000 ounce per year run rate, again, we should be running it at with $1,100 cost. We should be running somewhere in the region of 30 to 35 million of cash generation per year. So from that perspective, we're very comfortable that Brazil, not only can it sustain its own exploration programs, but also the development of the heap leach pads that we're looking to bring in. We delayed them by 6 months in order to ensure that Argentina would be able to fund that through its own cash flows.
Right. And when would you look to release drill results? Will they be usually done kind of in batches? Is that the plan going forward?
It is. I mean, our expectation is, we've had a little bit of issue with labs. I mean, labs and releasing of assays is always, whether you're in Quebec or whether you're in, Europe or no matter where you are, it's a little bit taking a little more time these days. But as soon as we have them, as soon as we have a good, quantum of results, we'll certainly make sure they come out. But things are looking pretty good.
And one kind of different kind of question, but where is the produced gold sent for refining and smelting?
In terms of we send our gold from Argentina to Switzerland and to Valcambia.
Okay, great. And then shifting to Brazil, you did mention the kind of financing, kind of non-dilutive financing, but when do you expect financing to be in place for Brazil?
We would like to see we'd like to be able to see evidence of that and publish evidence of that by the end of the first quarter.
Okay, great. And then a question about the capital cost. Are you concerned that inflation will run up the capital cost in Brazil?
I'm always very concerned, very concerned, and I watch it carefully. And one of the interesting phenomena that are taking place right now is if you order equipment for delivery in 12 months, it's very expensive. If you order it for 18 months or 24 months, it's far cheaper. To a certain extent, sometimes 30, 50% cheaper. There is a supply disruption occurring right now that we certainly believe over time is actually going to be lessened. If you look at our timeline, we'll need to look at ordering equipment probably by early next year, and that still gives us quite a good window gives us still a good window to be getting deliveries. And our expectation is that the supply constraints will be remedied by then. With regard of note to Brazil, we're looking with regard to equipment. We're contract mining, so that's already looked after by the contract miner. As it relates to the plant, because of the very high quality and the nature of the ore, we're not going to need it to customize. We're not going to need a very customized mill. It's going to be a pretty straightforward, off-the-shelf mill, which reduce our capex very significantly. And so, from that regard, very candidly, we're looking at ways right now that to significantly reduce that $431 cost. And I'm hopeful that we'll be successful in that. But I think the number we're using is a good one. We keep a very close eye on it, but we're pretty comfortable right now.
Great. And looking on the production side, is the production in Argentina different seasonally? Are there effects in the winter to summer?
The winter season, which would generally be possibly late June, July, and August, can be quite brutal. If anybody's been down to Patagonia, it's a little bit like being on the moon. It's very windy. It's kind of, you're isolated. It's very brushy and volcanic. But in terms of it can get very, very wet and sometimes cold. In 2020 in particular, we had a pretty brutal winter where it's very difficult. Although we had prepared for it from the perspective of what we do is we just stockpile a lot more ore as we move into June. And so we don't anticipate any major disruptions to production as we move forward.
Okay, great. And very quickly, on the COVID side, obviously there are some impacts anywhere in the world with COVID, but Argentina has been hit a little harder than some other places. Are you still impacted by some of the effects?
Well, with the Omicron variant that came out in early January, we didn't have the shifts. It's a fly in fly out camp, so the first shifts were very sparse, and we didn't have necessarily all the workers we needed. But at the same point, you know, the team down there have done a phenomenal job. We are the only mine on our belt that didn't close due to COVID. So the team have done a phenomenal job. The reality is that in terms of you know, we're seeing, you know, we were probably incurring about $250 an ounce cost due to COVID, directly and indirectly, and so the easing now that's taking place, and you know, I think we had one person who had symptoms of COVID in our last shift out of a staff of about 200 people that came in. So that's a pretty impressive. I'm hopeful that as we move forward, you know, that $200, $250 will actually be reduced significantly.
Great. All right. Well, thank you again, Mark, for the presentation today, and to everyone for joining us today. Up next, we have Grey Cliff Exploration on Stream 1 and Oh My Gold Mines on Stream 2.
Thank you very much.